Hey guys, we need to talk about AMC. AMC didn't have a 15% positive day, so what? It finished up 3.58% while the broader market finished red, and that within itself is a victory. The other victory that we have to talk about is we broke through two key levels of resistance at $60 and then at $62. We saw our high of the day at $64.70, and then we had a slight pullback, tested the key level resistance at $62 as support, validated it as a level support, and then consolidated above it. This is an incredibly bullish move and shows that AMC is setting itself up for its next big move. Now, yes, we did see an immense amount of selling pressure come in and push the stock from essentially $62 all the way down to its intraday low of $56.75. And then we spent about the last third of the day consolidating between $58 and $60 while trying to test that $60 level of resistance and break above it. We finished the day at $59.04, and it's a very positive day, guys. I'm taking this because AMC is setting itself up for its next move, and we'll cover that in the charts. We'll cover the short interest through Ortex. We'll cover Stocko Tracker, and then we have to talk about the DTC 2021-005 filing that was filed today. And briefly, what this talks about is it prevents borrowing of shares multiple times. So a prime broker can say, well, I have 1 million shares. Okay, I'm going to lend these 1 million shares out to 5 different people and have essentially an artificial supply of those shares while they only actually have 1 million shares. So this is going to be a 1-to-1 ratio. So I have 1 share, I can send out 1 share to borrow. Instead of I have 1 share, okay, I can lend out 5 shares kind of thing. Kind of mind-blowing that this isn't already a thing that's in effect, but now that this has been filed, I'm really happy about it because it's one step closer for us. And then the NSCC SR 2021-002 we should be hearing about next week, and that is the one personally I am more excited about, guys. But before we dive into all this kind of stuff, if you guys can, do me a huge favor, drop a like on this video, hit that subscribe button, make sure that you ring that bell for the YouTube algorithm. Let's get this video out to more apes that we possibly can, so more and more apes can be educated. And I really hope that I can reach out to some viewer and have another ape join Ape Nation army, because we're all going to the moon and we cannot wait. And the more apes on board, the better. But let's dive into this chart and take a look at AMC for the day. So AMC opened the day at $58.39. We had a nice period of consolidation here, and then we made that first break above $60, had a slight pullback, actually tested it as a level support, which is awesome to see that AMC, while essentially we don't have a lot of TA on it, is still intraday respecting TA and respecting levels of support and resistance. So we bounced off of this level support here at $60 and then broke above 62, saw our intraday high at $64.70, and then had a slight pullback, validated $62 as a level support. Now keep in mind, these levels of supports and resistance, yes, they're an exact dollar amount here on the chart, but they can in real life be a little bit of a range of maybe about 5 to 10 cents. So keep that in mind, guys. But we bounced off of this level support, validating it several times, and then we had this beautiful, come on, Weeble, give me my shapes, beautiful period of consolidation right here. And then you can see where we saw the shorts and really the selling pressure step in and drive the stock down to its intraday low of 56.73. I really want to point out here, we are oversold when we saw $56, which is awesome to see. This is awesome because it shows that the stock is oversold at this point, and it's a great dip buying opportunity on the chart. And then really for the last third of the trading day, I really want to highlight this region right here because it's just absolutely beautiful to see us really consolidate here. Because this is just beautiful consolidation between essentially $58.45 and that $60 level of resistance. And you can see how many times we tried breaking above $60. Once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8, 9 times. We really tried breaking above $60. And this shows how strong of a resistance $60 is. And in my opinion, We saw $60 and $62 break today, and we ran the 64.70 pretty darn quickly. And I think if we can break through it again, and personally, I think we definitely can, because we did it once, we most certainly can do it again. We will see 64.70 or $65 very, very quickly within the stock. But if we zoom out here and take a look at the 5-day, 5-minute chart, we can really see that we're riding a nice ascending level of support still. So we are moving in the positive direction after seeing the best dip buying opportunity that I personally have seen so far within AMC on last Thursday at $39.71. Now, if we zoom out here to the 1 month, 1 hour chart, you can see this ascending level of support even better. And our 200 moving day average and 60-day moving average are moving in an upwards direction, which is awesome to see. Now, you really can see here on the 1 month, 1 hour chart how key this $60 and $62 level is. The only time that we've really broken above it and stayed above it is on the 2nd and 3rd. So this is really like the neckline of a stock essentially that I'm looking at. And if we can get above $62 and close an hour candle above $62, we can easily see that retest is $70 and then the all-time high in the after hours of $77.26, in my personal opinion. Now, I do want to point out the RSI and the MACD here. They are still technical indicators, yes, but I'm taking them with a grain of salt right now because they're still only reading the candles and I'm really not looking at them. You guys can look at them, but really I don't think they're going to be very helpful when doing TA on this stock right now. But when we zoom out here to the year-to-date time frame, and I really like doing this in every single one of my videos because it helps us just get that macro perspective in our head of where we came from. We had our earnings here on the 6th, and we were trading at $9 on the 6th of May. And almost over a month later, we're trading around $59, guys. Almost a month later. If we had a time portal and said, can we go back a month ago and talk to ourselves and tell ourselves that we were trading at $60, we're trading at $60 a month from now, our past selves would be like, no, you're freaking crazy. That no way in a month, no way kind of thing. Like I would tell myself that I'm crazy. Now, like I said, on the 1 month, 1 hour, the RSI and MACD, take these with a grain of salt. Really, they're still only reading the candles. And we're pretty much at a level now with AMC that there's not a lot of data and we have to go off of really just the intraday data. Now, the next thing that I want to talk about is the short interest on AMC. We saw a positive short interest change today, which means there was more shares taken out than what there were given back. 5.09 million shares given out, 3.59 million shares returned. So we had a net bar change of 1.5 million. Our short interest to free float is sitting at 13.4%, and our current short interest is sitting at 68.5 million shares. Average cost to borrow is being 2.25%. Cost to borrow max is being 19.01. We did see our utilization increase from yesterday to today up to 82.9%. And just to remind you guys, as our utilization increases and we get up to that 100% level, we're going to start seeing that cost to borrow fee continue to go up because AMC is going to become a harder and harder share to borrow the short, which is good because we want these shorts to pay that high cost to borrow fee. We want it to be hard for them to get because then they have less shares that are available to short into AMC. Now, the thing that I really want to talk about on here is the average days on loan. Now, this is an indicator of how long the average loan has been out on AMC for short shares. And if we take a look at this, this is from Monday, June 14th. The average age is 47.55 days. Now, this tells me two things. Either there's older short positions covering, so the age is dropping, or the more likely case scenario, in my opinion, is that we're seeing new short positions, new shares, new shorts on loan being taken out on AMC, which is ultimately going to drive down this price, guys. And that's just my personal opinion and my 2 cents on the situation. Remember, I'm not a financial advisor. None of this is financial advice. But let's take a look here at Stock Tracker and really take a look at the calls in the money. So we have 484,497 calls currently in the money. At $60, we add another 31,869. And this is huge, guys, because if we want a chance of a gamma squeeze happening in this place, we have to try to do our best to bring as many out of the money options to in the money as we possibly can, because this is going to cause market makers to have to do what's called delta hedging to reduce their delta exposure. Now, since we're sitting at $59 here in today, market makers have more than likely hedged the $59 and $60 calls. But if we take a look at the options chain here and really take a look, where would be the next big step? And I look immediately at $70, and then at $73, we have 21,548 open interest contracts at $70, and then at 73 we have another 30,000. So this is one way that we can help a gamma squeeze happen this week, is by bringing all those out of the money options to in the money. Now the next thing that I really want to talk about is the out of money put, or aka shorts, going on here. It was 736,319 open interest contracts. I'm going to pull up my video here and I hope you guys can see this. Yesterday, it was 675,038 open interest contracts. Today, it is 736,319. That is a significant increase of out of the money put options. And this shows that either there's some hedge fund out there that really wants the price of this stock to go down. And I said at the beginning of this week, guys, it is going to be a volatile ride, and it is definitely going to be a volatile ride because we have a lot of out of the money put options here. And when we take a look at the stock and take a look at the puts, because we want to understand both sides of the options chain, at $60 today, there was 23,488 puts traded, and there's 10,556 open interest puts at this strike. This, to me, is my definition of a put wall right here at $60. And then if we take a look at $65, there's 1,480 open interest puts here. And there was another 10,752 puts traded at this strike. It's an immense amount of volume at this in the money put. Now, the out of the money puts, the one strike that really stood out to me was $50, 14,906 open interest puts at $50. And then at 45, we see another 17. But the volume traded at $50 here is around 26,000. That is a lot of volume on these puts, and it just shows that these hedge funds are doing everything that they possibly can to put AMC down, guys. Now, the next thing that we need to talk about is the short ETFs. The short ETFs did decrease throughout the day. So we're seeing shorts through puts, we're seeing shorts through short shares of AMC, and we're seeing short shares of AMC through short ETFs. So they're hitting us every single way that they possibly can. They're using all the FUD articles that they can, and they're trying to pin us against each other. AMC and GME apes against each other, or AMC ape versus AMC ape against each other, and they're doing everything that they possibly can. And we have to hodl, guys, and we have to ignore the FUD. We have to, because it's just one of their tactics to try to emotionally get to us and get to our emotions to get us the panic sell, guys. And I'm telling you one thing right now, I'm not selling at all. I have my diamond hands and I'm ready to go to the moon and see the moon with you guys and have a nice interplanetary party. Now, the next thing that I really want to talk about is the DTC 2021-005, which I talked about a little bit earlier, prevents borrowing of shares more than once. Now, you might be thinking, like me, when I said that, well, how the heck can you borrow a share more than once? Well, market makers have apparently been doing this, and it hasn't been set in rule or in place as a filing yet. Well, today that changed. It was filed today, and if you take a look here at page 14 of 115, I'll link this down in the description below. The proposed rule change would become effective upon filing, which is awesome, guys. This is incredibly helpful for the squeeze because now we don't have to worry about market makers or hedge funds saying, okay, well, you have 1 million shares of AMC. Well, can I borrow it? And then this next hedge fund borrows it. And now instead of 1 million short shares of AMC, it's 5 million short shares, which creates an artificial supply within the stock. Now we will have a more 1-to-1 ratio, which is great within the market, guys. We're improving the markets as we go through this movement, guys. And that is exactly why I'm on this journey, not just to go to the moon, but to improve the market and to help the retail investor have a better advantage within the market, guys. Now, I did say that NSCC 2021-002, I have 005 here written on my notes, which is wrong, but 002 is going to be talked about next week, and hopefully we will see something about that being filed, which is going to increase the collateral requirements on this. And let me tell you one thing, when we take a look at this loan age and we go back 47-ish days, which is roughly about a month and a half, so let's say the beginning of May here, so the beginning of April. Gosh, I can't even count my days, guys. So the beginning of April, AMC, let's say it's going to be trading around $10. We're trading around $60. So they're 6 times under the water, guys. That is an insane amount. And you can bet that if they're 6 underneath the water, the NSCC is going to be going, hey, buddy, you need to increase your SLDs, which is your supplemental liquidity deposits, because you're 6 times underneath the water. And that hedge fund might go, well, I don't have enough money to have as a collateral requirement for this position. And the NSCC is going to go, well, tough luck, buddy. You have to do one of two things: provide us the money for your position, or essentially buy back your position. And that is possibly going to start the margin calls between the 005 and 002, guys, in my personal opinion. And if we don't go crazy this week, I think next week could be seeing the boom that we might get from this 002 filing being approved, guys. But really, that's what I got for you guys today. Hope you guys have a good one, and I'll see you tomorrow. Peace.